Hello, traders. It is 8:03 a.m. Chicago time on Wednesday, the 19th of June, 2019. Today is Fed Day. Everything is pointed in that direction, including the lack of action overnight. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not and is never necessarily indicative of future results, really. This morning, the overall market sentiment is slightly tilted to risk on, but really nothing to talk about. The leader is the NASDAQ today, up 9 points, trading at 7682.5, which represents about 0.12% over yesterday's settlement. The S&P's unched on the day, so are the Euro stocks. The Dow's up 9. Crude has come off after a strong pop higher yesterday. Again, crude is now in August 2019, or Q9 is the front month in crude, trading at 53.85, or down 25 cents, or 0.5%. So nothing to talk, not much to discuss here. I would say that the market sentiment coming in, or the risk allocation coming in this morning, is pretty much even. In terms of what's on deck for today, what's likely to drive things, really all eyes are on the Fed. Not much more to say there. We did hear from Draghi yesterday, in case you missed yesterday's Trader Bite, and the impetus for the pop higher. We did have Draghi come out and say that lowering interest rates is in their arsenal and is under consideration for the ECB. Following that, POTUS came out and said that they're devaluing their currency, and this is an advantage that China and Europe has had, and that the Fed needs to kind of get going on this and do the same thing. And that brings us to today. Today's Fed decision coming out at 2 p.m. Eastern. I don't have much more to report than that. Everybody has access to news feeds and so on. Yesterday afternoon, the drop that we saw, actually late morning, the quick drop that we saw was, again, POTUS, or the White House says that they've had their lawyers look at the option, the legality of removing Fed's chair Powell, and that this morning the president said they found removal would be very questionable. And so, he's not lowering rates fast enough, and so his job is at risk. So I don't know how much that weighs into today's decision, but we need to keep an eye on that. Of course, the news is leading the way, and what happens there is important, and that prices do respond. What's on deck for today? Overall, we got inflation out of Great Britain. We got inflation out of Canada this morning. And we're looking at crude oil inventories at 10:30 million on crude and gasoline, expecting a surplus of 935,000 barrels. And then we get the Fed rate decision at 2 o'clock. The expectation is for them to hold. The consensus is to remain at 2.5%. And then we get the projections and dot plot and all that stuff after that. Brazil's rate decision comes out at 5 p.m. Eastern time this afternoon. So that's what we have. Let's take a look at what was expected yesterday versus what we got. Here's the review segment. Overall, we opened in a gap yesterday. We left a gap behind. The primary scenario is that we're likely very strong probability of immediately taking out the overnight high, and we did. And then I expected the market to run out of steam and rotate down, but leave a gap zone behind. That's what this is right here. Oh, let's go back to yellow. Oh, yellow. So expected a gap zone to remain behind, which it did. The secondary scenario is to push through the overnight high, drift down, and then start to push with an impulse up to 29.2875. Here's what actually happened. So we gap up. We open at 29.14. Right here, this is the opening print. This is the opening swing, the blue dashed line. The opening print, the opening swing, we have an open auction. We do not take the overnight high yet. That overnight high was 29.19, I believe. And then we have the impulse. We go into an open auction out of range. We have an impulse up. And from there on out, we just completely hands off on the sell side, look for buy spots. We push into 32.50. We push into 32.50, which gives us a really, really tight coil and a very, very weak high or poor high. Some people look at this as a seven top. 7 top resistance, but overall it really shows that the market was squeezed up against that 32.50 with the point of control at the high. I did take a trade on this because I did not catch this move up. Did take a long trade somewhere in here, I believe, and was shooting for the 32.50 IB high. At that point, right here, the IB was in, and there's a 98% historical probability that the IB high or the low is likely to be taken out. The historical probability of both the IB high and the low being taken out is around 27% historically. So I was betting on a 98% historical probability. The market is not likely to turn all the way around and take this side. So with a 3.5 point stop, that ended up pushing, and we ended up pushing into our 39.36.5 or 39. It's actually 39.36.75 stock zone. And as I'd mentioned in the Convergent chat, I was working 39.36.25 for an exit up there at 2 ticks ahead of the stock zone center, and it ended up going, luckily, and it's all luck, there's no skill there, by the way, it ended up going to 36.5, 1 tick through, and rotating down into the mid. The problem here is that, so we got that news about Powell right in there, and the problem here is that once we get an impulse and we get a range expand or rotation expansion down, we expect continuation moves, and that's what we got on the downside. We have our first impulse and actually a pretty strong sell stream right here, sell delta. We expect that to continue lower, and it did. So I was not interested in the mid long in this context. So we ended up pushing into that pretty much for the entire session. We retested the developing point of control later on, and my expectation is that and we did a member trade talk yesterday where I explained that it's likely to come back up to the point of control, but my expectation is it's likely to rotate down to 17. And it pushed to 19.5, and it ended up buying into the close. There's a fair amount of buying. Here's what it looks like. Again, take your volume and your volume delta with a grain of salt in this environment. And what we have here, again, for those of you who haven't seen this chart, what I'm doing is splitting the aggressive buyer minus the aggressive seller. And this is the large lots are white, the very large lots, which is 100 lots or more. This is on a consolidated tape basis. In other words, we reassemble the trades back to the demand side. So if it's 100 lot and it's filled in 520s, it doesn't consider those 520s. It considers it 100 lot. And you could see there was a lot of buying by the very large lots by the end of the day. So you could see that strong push by buyers at the end of the day, which didn't quite move price, which tells me that potentially this is a part of a long calendar spread that came in, but there was a fair amount of buying into the close in terms of volume. So that's the review of the prior session. Probably spent more time on that than I needed. And then from there, it is a snooze fest. The world is waiting for the FOMC to come out and do what it's got to do. Look at that profile. Good kurtosis there, pretty high kurtosis on a completely balanced profile with good tapers on each end. If we stretch this, and I don't want to keep it stretched, look at that. That thing looks like it came out of a statistics textbook. Beautiful excess, and then a normal distribution in the middle, and a beautiful excess at the bottom, with the value area being one standard deviation. I mean, it's a beautiful thing, right? So that's what we have overnight. How does that inform us? It's telling us that we don't have anything to weigh in on the overnight session, except that it's coiling. It's got okay volume. Again, rollover brings in higher volume for the week. It's got okay volume. I think if it wasn't rollover, if it's post expiration, this will probably be more like 130,000 or so, and that's that. So there's not much to glean from there. Let's move on to our expectation for today. So we've popped higher yesterday, and we're holding steady. And again, we're all waiting for our wonderful Fed to do what it's got to do. And let's see. I'm not following the chat. I'm just too busy. So where are we opening? We're opening in range, in value of yesterday. Yesterday, this was value. It's not an elongated profile in the value area. So in range, in value, against the overnight point of control, and right below the prior day's point of control. This is completely balanced. It's opening in complete balance. So today is just a good day to just kind of lay low, kind of like a predator hiding in the bush, lay low. Don't jump on the first prey that comes along, the first trade. Just lay low, let things set up, let everybody get comfortable, and then pick your spots very carefully until the Fed comes out. We expect some volatility from the Fed. Expect the standard three-wave pattern on the Fed release. 1 second, I need to cough real quick. And so the expectation is for an open auction in range and value. So complete balance, chop, chop, chip, chop, trader territory, and a broker commission fest. And then I'm expecting it to make an attempt at that low first, and then push higher and attempt to get into that 37 again, but hold steady. And then at 2 p.m. Eastern, we have our FOMC, and the expectation is for higher. I'm expecting it at 29.50 this afternoon, but it's a 50-50 chance here. It could drop. The Fed may not say what the market wants to hear, but what's important here are the key areas to test above. The key areas to test above from where we are, 29.50 above, and then below, we're looking at 2,900. 28.98 to be specific as the MC point of control, and the next balance area down. Okay, and so to me, it's likely to test one of those levels, and your guess is as good as mine in terms of which way it goes. The secondary scenario is not that different because it is Fed day. The secondary scenario seeks to. Oops, color didn't change. It was too fast. It was too fast for my PC. The expectation is we take out the high. The trend is your friend, and the trend is higher. We're one time framing up, and then we're looking at a test into the 2932.50 area potentially, with an impulse down that then brings us into where we expected to finish yesterday at 2914.17 before we come into the Fed and do whatever we have to do in terms of what the Fed does or says. Still expecting the same results, except that if it's scenario 2, if we start lower, it is more likely to then tag the 2888 area below. It's a naked point of control and a prominent area on the profile, and that would be the next area to coordinate a target. So that's that. Again, it is Fed day. Chill out. Take it easy. Go for a walk. Do your workout this morning. Do some homework and all that, and see how the market plays out. And the way the Fed plays, when I say a three-wave move, if this is the SOC for the Fed, meaning this was the last print for the Fed, let's call it 2932.50, it is likely to immediately spike. Let's say if it spikes up, then it's likely to test back. And then this move, whatever the next move is likely to be the one where the OTF starts to work itself in. That third move, by the way, could be a pullback and a push down. This becomes the third move if it's not continuous. If it takes out the low, that becomes the third move. It's a little more complex, but that's what we're looking at. Okay? So good luck today. Again, take it easy. It's a big day today. Good luck. I'll catch you tomorrow. Take care.